We've got to get to some squawk picks with Kari Firestone. That's why we brought her down. Kari, before we jump into the actual picks, just very quickly, you said something that I've heard from a lot of people recently off camera. The market's a little boring right now. It is. There's not the same volatility or movement or action. We're waiting for the next catalyst. What do you think it's going to be?
Yeah, we're treading water. I think we're waiting for earnings. We don't have far to go. I mean, in a few weeks, we're going to start to hear the financials, and the banks are going to give us an idea about their lending. I think there's activity picking up on the banking side. You know, we haven't seen IPOs. Well, we've just seen a couple, Instacart and Arm in the last week. There are going to be more.
IPO coming?
Right, exactly. So that's working for the banking system, and I feel as if there's a bit more enthusiasm about earnings. Up until last week, expectations for this quarter were down versus last year, and now they've moved positive. So we will start to hear more. And remember, a name like Salesforce, which is one of those July reports, it's off the calendar year. They had a good quarter because they pointed to some strength that they're seeing in a rebound in bookings for, new subscriptions on CRM systems, and that was a good sign. It gave us an indication that things are perhaps picking up.
You have actually sold some of your, trimmed some of your positions, I guess is how you would put it. Things that you still have a big position in, but you've gotten a little worried.
Well, I think what happened is we had this huge move from last October. So names like Adobe, Salesforce, Google, these were all up over 50%.
Right.
And they're still big positions for us, but just because of the weight, we felt, it's a prudent thing to do to take off some of the position, hold the rest. But we're still there.
And you're buying other places too. One stock that you bought recently, EPAM. That's not something I'm familiar with.
Yeah, no, it's not a name that's very familiar. It's I would say, mini Accenture, a consulting company that focuses on digital transformation. Down a lot because many of their workforce was in Ukraine. They've transferred them to other locations, but the stock is down over 50%.
Okay. Other stocks that you like right now, UNH, United Healthcare. Why?
Yeah, well, UNH is both defensive because it's a big healthcare provider. That's not early cycle. It has a great business that's based on insurance for employees. We know that the employment numbers have been strong. The economy is growing. We're not in a recession. And so we think that UNH, with a decent dividend, it's below a market multiple, is a good buy right here.
You like Blackstone, too. Is that just because it's being added to the S&P 500 or other reasons?
No, we've owned Blackstone for years. We've been expecting it to be added for the past 6 years, I'd say. So it's picked up the pace. But the private equity business, which has been in a slump, is starting to improve. If interest rates aren't going to continue to spike, I think that's good. The real estate market, of which they are invested all around the world, not in office towers, but other forms of real estate, we think is looking better. And again, it's not an expensive stock with a nice yield.
Again, you mentioned all these IPOs. The deal market is maybe opening up. If that's the case, you've got to play for that, too.
Yeah, well, we're not buying any of these IPOs yet. Yeah. There's something important that we're seeing, which is these companies have to have earnings. Both Arm and Instacart, they produce a profit. We're not in an era right now where anyone wants to pay a huge multiple of sales with no earnings for several years to come. That's different from what we saw a couple of years ago, and I think it's healthier for the market.
But as a result, you say, okay, I'm sorry, the debt deal market is opening up, and so that's good for...
Both. I mean, the debt and equity. I mean, debt on S&P Global is one of our names, and that's been in a real slump because no one was borrowing because interest rates were going up. Now, if you have to borrow, you've got to go do it. You can't just wait forever.